Hello there. I am chatting with you today about audits. Do you need one? Should you get one? How does that work? What is an audit? So accountants we are able to prepare financial statements, obviously, but the level of assurance that an accountant can give on a set of financial statements differs. So there could be a minimal level where an accountant has just said, here, this fits into the proper format, and I've just taken what management has done, the records that management has kept, and I've put them into the proper format, and here you go. All the way up to an in-depth deep dive where they've gone through and recalculated some things, asked questions of management, verified balances from external sources, really gone through and made very sure that the financial statements are not misstated. And that's the highest level that an accountant can give. That's an audit. They give an audit opinion at the end of a deep dive like that. And it's either clear, like these are not misstated as far as we can tell, or it's a qualified opinion where it says everything is good except this one thing or two things, and they make specific notes as to what those are. And then, you could have an opinion that just says, these are not good. So that's an audit. That's the very highest level of assurance. The next level down from that is called review engagement. And these engagements are to provide a level of negative assurance. So negative assurance is the absence of something being wrong. So in an audit, they prove balances and they prove that systems work, and they go through, and it's like positive assurance because they can prove that it works. The review engagement is the opposite of that. There's nothing that stands out as funky to the accountant, and they're able to sign off and say, this is plausible. We've done some work, we've checked some numbers, and it looks plausible. That level is far less expensive than an audit, but it is more expensive than the lowest level of assurance. So the lowest level of assurance is the one that we are actually most familiar with. It's called a compilation engagement, which is not the normal term that you hear people usually using. Usually it's a notice to reader financial statements. So the accountant will take the information that management has created or generated or recorded. Usually the bookkeeper has recorded transactions throughout the year, and the accountant takes that information, puts it into financial statement format, and that's kind of it. This level of assurance is what you need to do your corporate taxes. So this is usually what happens at the end of a year end. This level of assurance can also be used for some bank loans, depending on how much it is and what the bank wants. So that kind of leads into my next point is, how do you know what you need? How do you know what level of assurance you need? Well, think about who uses your financial statements. If you have a really large loan with the bank, it could be that the bank requires audited financial statements, in which case you have no choice. You have to go and get an audit. If it's only management and there are no external users, maybe just a notice to reader is all you need, because you just need to produce financial statements to be able to file your corporate taxes. In Ontario, to perform an audit and a review engagement, you need to have a public accounting license. So I'm not going to go into how you get one of those, but you basically need to have a designation, and you need to have a certain number of years of experience, and then you can get this public accounting license. If you don't have a public accounting license, you can do compilation engagements, and that's all. I mean, you can offer other services, but the highest level of assurance that you can offer is compilation or notice to reader. So that's me. That's what I do, is only notice to reader and compilation engagements, because I don't have a public accounting license. I don't do audits or reviews. The other thing you can think of is, are you going to be selling your business in the near future? If you think I really want to sell in the next year or 2 years, it might be worth it to get an audit, because purchasers generally want audited financial statements so they know what they're buying. It provides a level of assurance that there's not any skeletons in the closet, and they're not going to buy something that they didn't know that they were buying, like some sort of debt that wasn't on the financial statements or something like that. So in my experience, obviously, because I don't have a public accounting license, the notice to readers are the most common. Certainly for small business owners, generally all you need is a notice to reader. And yeah, if you have any questions about levels of assurance or which one is the best choice for you, I'd be happy to chat with you about it. I'll leave my call link in the description of the video. And if you want to learn more about it, I'd be happy to chat with you, but you can also look on the CPA website. I will see you tomorrow.